Hey guys, it's Nick. People who started investing after the 2009 financial crisis have learned that it is always profitable to just buy the dip and wait for the market to make new highs. But what happens when that stops working? Trying to catch a falling knife on a stock that used to be a high flyer but is now falling fast can wipe you out quickly. I want to tell you the story of what happened to me when I tried to catch a falling knife in two stocks when the internet bubble started to burst in the year 2000. So here's my story. During the internet bubble, I was working on Wall Street, although it wasn't literally on Wall Street. It was in Jersey City, New Jersey. And for those that don't know, this is where the large NASDAQ market making firms were at the time. Now, unlike Jerome Powell and the other Fed presidents who could trade on insider information whenever they want, we actually had rules and had to fill out a form and get trades approved by a manager, and I think maybe even file the form with compliance. Anyway, we were encouraged to buy mutual funds or diverse ETFs, and individual stock purchases were scrutinized more, and we were expected to be long-term holders of, I think, maybe over a month or so of a stock. So if you're going to buy a stock, you better be willing to hold it for a while. So during this time, the NASDAQ was up about 85% in 1999 and was now in the process of a blow-off top that started to burst in the year 2000. There were a lot of high-flying stocks that were up more than 100% or so in the last year that would come down and start to look like relative bargains. At least that's what I thought at the time. This story is about two very popular, very profitable, and very blue chip stocks. One of them you know, and the other has been thrown into the dustbin of Wall Street history. The one you know is Intel. The one you may not know is Lucent Technologies. Now, Lucent was like the Apple stock of today. It was the most widely held stock among investors. It was a spinoff of AT&T's equipment manufacturing division, and it made telecom switches, fiber optic networking equipment, and wireless equipment. So during the internet boom, this stock was like a no-brainer, and everybody owned it because they all knew it would just keep going up forever as the internet grew. And when it IPO'd in 1996, it was the largest IPO ever at the time. And although Lucent traded on the New York Stock Exchange, it was a tech stock, and so it traded like a NASDAQ tech stock at the time. So for a little background, let's see what was going on in the NASDAQ at the time these knife-catching trades took place. So here's the NASDAQ 100 in the QQQ ETF, and from 1999 to 2000, it was up about 85%. Then in the first 3 months of 2000, it was up another 25%. And late March, it started to fall into April and May and had a little bounce. And then right around September, it fell from around this 102 level to about 35 or so by April of 2021. So it fell about 75% in 6 or 7 months. So here's a look at the chart of Lucent. At the beginning of 2000, it was around $75, dipped a little bit down to like 50, bounced back, and around July, it just started its descent down and never looked back. And it probably went as low as what, $10 or something over here. So it lost like probably 80% or more within the year. So my first trade in Lucent was April 13th, only 100 shares, so somewhere probably around here. And I sold them within 20 days and made a 9.6% gain. Then in September, when it really started to fall, I was thinking, oh, this must be a bargain, right? So I bought 1,000 shares at $40 or so, held it for 28 days, and lost a whopping 19% in less than a month. So if I liked it at 40, I gotta love it at 21, right? So I bought even more, 2,500 shares in October, somewhere around here, October 12th. And within 4 days, I got out. Okay, I made 6.9%. And then I bought 500 shares again a little bit later, a week later in October, and basically broke even. And then in December, when it was even lower, I bought 1,000 shares and made a little bit of profit, $2,000. But the overall gain was a loss of 1,300. It could have been a lot worse had I just been averaging down from, the 65 level and just averaging down all the way down to here, which is what, $12 or something like that. So, but I just remember buying this thing every time it went down on more bad news, and I would buy it and I would have to run and get this thing approved and whatever. And a few days later, I wanted to dump it because it was looking so weak. And so you see, the first time I held it and took that loss. The next times I only held it for 4 days, 5 days, 1 day, and then I was done with it and I said no more. So let's look at Intel. In 1999, it went from about $30 to about $70 in 2000. And it dipped along with the NASDAQ down to like, I don't know, $50 or something like that. But then actually made a new high above like $73 before it started its descent in September, along with the NASDAQ, from like $74 to around $20 by April of 2001. So like a 70% loss or something like that in like 7 months. So my first buy on Intel was around September 15th at around $53 when I thought I was getting a big discount, about 30% off the high, and it's Intel, so it's always going to bounce back, right? But then not long after that, it warned that it's going to miss its revenue targets or whatever, and this big gap down happened, and I ended up selling it 21 days later for about a 25% loss, or $27,000 loss on 2,000 shares. And so the actual earnings date was October 17th, and I bought it the next day, October 18th, thinking that all the bad news was out, and I bought 1,000 shares. And I held it for 6 days and made like 8%. But 2 days after this first purchase, I bought another 1,000 shares thinking that I'm going to double up here because this thing is going higher and the worst is over. But already in the same day, I didn't even hold it 1 day, which I think could have got me in trouble. But based on what was going on in the market, I guess it was okay for me to get rid of it the same day. And I did that and took a small loss. And then here in December 11th, I tried to buy 700 more, and I held it for 10 days and lost 4 grand, or like 15%. So I tried to buy it up here, I tried to buy it here, I tried to buy it here, and it ended up going even, probably about 50% lower, all the way down to, or more, like down to $15. A year later or so. So just because this thing has gone lower and lower and lower, it could still go lower than you anticipate. So what's the lesson here? Well, just because a stock is seen as a solid or profitable company, when sentiment changes about the market, everyone looks at stocks in a different way. So if you think you're getting a bargain by buying a stock after a 20% dip, you may find out that the stock has a lot lower to go. And if you don't limit how much you invest in any one stock, you could get wiped out when the bubble bursts. Worse still is to keep buying more as it goes lower and lower because you don't want to admit to being wrong and you don't want to take a loss. So you should always have a stop loss in place and stick to it. And don't try to take revenge on a stock that you have taken losses on. I'm sure you know, and I definitely know, that when you try to do that, you usually lose even more money. It's kind of like when gamblers take big losses and then they go on tilt, taking riskier and bigger bets to try to make back their past losses. It never ends well. In my case, these two blue chip, safe, profitable companies ended up going much lower than I ever imagined that they could. And I kept trying to buy the next leg lower and lower, hoping that it was finally the bottom. Now, I lost a lot of money doing this, but I would have lost even more if I just kept averaging down as they went lower. I don't know if what's going on right now in the market is the popping of the bubble, but it seems to me that the sentiment is starting to change with the headwind of many interest rate increases expected to combat growing inflation. It may not be the time to try to get big gains. Instead, it may be more important to limit your losses at this point. If you have a story of catching a falling knife that you still think about, let me know in the comments below. If you like this video, hit the thumbs up, and I'll see you in the next one. Thanks for watching, guys.